joined us, welcome to 10 Questions with the APESB. Presenting today, we are joined by Craig Farrow, Shana Winchesing, and Professor Brendan O'Connor. Now, I would like to begin by acknowledging today that we are joined by a CPA Australia President and Chairman of the Board, Marion Kelsall, who joins us from Melbourne, Victoria. Thank you for joining us today, Marion. Welcome. Now, I'd like to begin by welcoming Brendan into the conversation, today's webinar chair. Now, just opening up your mic there, Brendan, and handing control over to you. Thank you very much.
Okay. Excellent. Okay, everybody. Well, welcome to everyone today. It's my pleasure to be here as the chair of the Ethics and Professional Standards Board of CPA Australia to host this webinar with two of the very senior people at the Apes board here in Australia, and we've got Craig and who's a director, and Channa, who's the CEO. And we've got a series of questions that we're going to be asking them in turn, but I will start with Channa and just ask you, Channa, can you provide us with an overview of how the Apes board works and how it interacts with the International Ethics Standards Board for Accountants?
Thank you, Brendan and CPA Australia, for hosting this webinar to talk about APESB's work. Concerning the first part of your question, Brendan, APESB was established in 2006 as an independent body to develop the professional and ethical standards for the members of CPA Australia, CANZ, and IPA. Members of these three bodies must comply with APESB standards. There are three aspects to APESB that members should be aware of. Firstly, globally, APESB has a unique structure where the board sets the standards for three accounting bodies at arm's length from the profession. It is more common to see these standards established by a professional body or an audit regulator. Secondly, APESB has developed a comprehensive suite of professional pronouncements for the accounting profession, addressing different services such as valuation, forensic, and a range of other services. The only international comparable is the American Institute of CPAs. Thirdly, while APESB sets these standards, compliance is regulated by the relevant professional bodies such as CPA Australia, or in certain instances, a regulator such as ASIC for auditors. Addressing the second part of your question, APESB actively represents Australia's interest to influence the development of the global code and independent standards by the International Ethics Standards Board for Accountants, or Iesba. APESB has been a member of the ISB's National Standard Setters Group, which essentially consists of the standard setters of the G20 jurisdictions since its inception in 2009 and contributes to the Iesba's work program. The Australian Code, or Apes 110, is based on the ISB's Global Code. The Iesba Code has been adopted or used as the basis for national standards or ethical codes in over 120 jurisdictions and by the largest 27 international networks of firms for transnational audits. As you know, Brendan, global consistency and comparability of the code and independent standards are important as they facilitate global commerce, flows of capital, and ultimately influences the cost of capital.
Okay, great, Channa, and thanks for that. We'll now move to Craig for my next question, which I'll post up here. The Apes board has recently released a new strategic plan for 2021 to 25, which is exciting. What are the key focus areas for the upcoming strategic period? And is there any specific impact on small to medium accounting practices?
Okay. Thank you, Brendan, and thanks for the opportunity to participate today to CPA and join yourself and Channa. So, yes, we did just release, and we really So the strategic plan for APESB operates through 4 strategic pillars. firstly standards and engagement, or then engagement, influence, and outreach, or ethics outreach, with obviously standards being the core and principal focus. These pillars ensure our primary purpose is in achieving standards is developed, and what's important is that is not just about developing the standards, but then there is appropriate engagement, outreach, and communication, both domestically and internationally, across the breadth of business and practice, be that SMP or other.
Okay, thanks for that, Craig. And I've got one more question for you, and this is in the technology space.
Yep.
There's been a huge upswing in investment by entities in technology, including artificial intelligence and the blockchain. What should accountants be aware of from an ethical perspective when using or trying to analyse such technology?
Yes, Brendan, they're definitely it's become a key part, or a key focus within the strategy and the discussions of APESB around technology. We've made an investment in training and some resources, and doing a lot of work outside in looking at what are the implications and speed of technology, and how practices and businesses are adopting it. So it has actually been a subject of much discussion and effort. In fact, Channa reminded me the other week that there was a Gartner study where 79% of small and medium business were expending and increasing their software purchase towards the digital future. We're very conscious of the risks that can occur through technology, and cyber security, etc. So one of the key risks is cyber risk. How's it being addressed, and do businesses, practices, etc. have necessary security in place? And what are the controls in place as well? And do those controls actually suit the circumstances of what has happened with technology? Do people actually understand the technology, the control, and the use? And have they thought through those impacts with a fresh set of eyes, if you like, not just adopting the old? So, for what's that mean? Make sure you understand what the technology is, what is being put to you, how it's going to be applied. Make sure you're asking the right questions around the technology, and make sure that you can actually make sense of the data that comes from the use of technology, not just accepting the answer, if you like, the old principle of garbage in, garbage out, and being careful of that, and making sure that you do have a fresh look and not carry bias in. So don't over rely on technology. Make sure the technology is actually augmenting or supporting your ability to apply your professional judgment, and be prepared to engage with experts, in the technology, be it artificial intelligence, blockchain, or whatever, and make sure that you have an understanding of how that interaction is to occur, and their skills, so that you have a familiarisation. Internationally, we are working with the Iesba to develop some material for guidance to practices in respect of technology and impacts around auditor independence, and etc. So technology exciting. Clearly we've come a long way in the profession over the decades with the adoption of technology, but you need to have an eye to what are the impacts on ethics and decision making.
Okay, thanks, Craig, and certainly some great information there for us as we all try to grapple with technology and its implications for our firms or our organisations that we do accounting work for. The next question moves to a bit of an audit focus, and I'm going back to Channa for it. What are the proposed restrictions relating to the non-assurance services provisions of the APES 110 code that the Apes board is considering? And what do you think the impact will be on our audit profession?
Thanks, Brendan. A bit of background on this project. The Iesba's reviews of the non-assurance services, or NAS for short, and the fees provisions of the code commencing 2018, and were driven by audit failures in jurisdictions such as UK, South Africa, and even Australia. As a result, the global regulators and those in the corporate governance community have raised concerns over auditor independence and to the extent to which A, the external auditor providing NAS to an audit client impacts on their independence, and B, the level of audit fees and whether there's any cross-subsidization occurring between the audit service and NAS. A related issue is the substantial growth of the consulting arms of the big firms in the last decade and the extent to which it has impacted audit quality. For example, in Australia, the proportion of audit revenue compared to total firm revenue in the Big Four has declined from over 30% to 20% or lower. So some stakeholders point to this information and say there's cross-subsidization occurring. That is, firms are providing audit clients with lower margin audit work, which is complemented with higher margin consulting work. ASIC's 2020 audit inspections found that auditors did not obtain reasonable assurance that the financial reports were free from material misstatement in 27% of key audit areas that ASIC reviewed. This compares to 26% in the previous year, and it is only in the year ended 30th June 2015 was the last time that this measure was under 20%. Since that time, notwithstanding the efforts and initiatives of various stakeholders in the auditing ecosystem, this measure has been in the 24 to 27%. So the changes to NAS, fees, and quality management standards, which we will talk about shortly, are efforts by the global standard setters to address these independence and quality concerns. Audit quality concerns and the results of the ASIC audit inspections led to the commencement of the PJC inquiry in Australia in August 2019. APESB made 3 submissions to the inquiry as well as appeared as witnesses before the PJC. The PJC released its recommendations in November 2020, and we are still waiting for the government's response. In that, recommendation 3 deals with disclosing fees and developing a list of non-audit services that firms are expressly prohibited from providing to an audited entity. Then there's also PJC recommendation 4, which talks about the auditor independence declaration, specifically confirming that no prohibited non-audit services have been provided. Even before the PJC inquiry, as I said before, Iesba had commenced its NAS project, and this resulted in the issuance of a global NAS standard in April 2021. The key revisions are for a public interest entity or PI audits, and examples of PIs are the listed entities or APRA-regulated entities. If the NAS might create a self-review threat, then the service is going to be prohibited. The current materiality qualifier for NAS will also be withdrawn. So in the future, even immaterial NAS cannot be provided. There are also new requirements for firms to communicate with those charged with governance, such as audit committees, and to obtain their approval before providing the non-assurance services. APESB is currently considering whether the NAS provisions need strengthening, and this is in part to respond to and address PJC's recommendation 3. Potential revisions being considered include prohibition on advocacy threats for tax planning and advisory services for PI audit clients, and whether the term likely to prevail in the NAS provisions dealing with tax should be strengthened, for example, include highly likely. The board considered this project at its June and September 2021 board meetings. We are going to undertake further stakeholder engagement, and APSB will shortly issue a NAS survey, which will focus on gathering the views of key stakeholders such as audit committee chairs and CFOs. The outcomes of this engagement will be considered at the board's November 2021 meeting. In New Zealand, the NZAUSP has issued an exposure draft on NAS that proposes prohibiting tax planning and advisory services. In the UK audit reforms, there has been significant focus on the external auditor providing other services, which has led to the development of a framework to operationally separate the audit and non-audit divisions of the Big Four firms by having separate governance structures by 2024. So, Brendan, the overall impact on the audit profession in the long term will be the ability to provide NAS to audit clients will be restricted, and that will hopefully deal with the stakeholders' concerns about actual or perceived impact on independence.
Okay, well, certainly I think there's food for thought there with the auditing profession and their business model going forward. Continuing the theme on the auditing profession, the next question moves away from the non-assurance services and towards the fee related provisions of the code. So what are the proposed changes there, Jenna?
Yeah, so in a way it's sort of related as well, Brendan. So APSB is currently considering revisions to the fee provisions of the code, and the proposed changes are coming from three different sources. So firstly, it's Iesba's work and the global changes to the code. So some of the things there are the requirement for a firm to cease to be auditor of a PI audit client if the fee dependency, if there's a fee dependency of 50%, 15% of the firm's revenues, and if it continues beyond 5 years. There's also a new requirement for a fee dependency threshold for non-PI audit clients. So this is a new thing, and they've introduced a threshold of 30%. There's also new requirements to improve the transparency of fee-related information for PI audit clients. There's new guidance to assist firms in evaluating and addressing threats to independence created when a large proportion of the firm's total fees for an audit client is for other services, which goes back to the NAS issue. The second source is the PJC recommendation. So PJC recommendation 3 addresses the disclosure of fee categories. APSB has been liaising with the FRC working group on this matter, and the consensus view emerging is that the disclosure of fees paid to the auditor should have 5 categories. The first category is audit fees as it is currently. Then the other services disclosure will likely be expanded to audit related, other assurance, tax services, and then other for all remaining services. These categories were included for consultation in the fees exposure draft. There's also PJC recommendation 5, which dealt with strengthening of the auditor incentivization prohibition so that no audit partner is incentivized directly or indirectly for the sale of NAS to audit clients of the firm. This was also included in the fees ED for consultation. The third source is a request from the regulators to include an actual threshold in an OS provision relating to the referral of multiple audit clients from one source. So this was OS provision and was put in there in 2013 to address the SMSF sector. To address this regulatory request, the fees ED also had a proposed threshold of 20% to provide clarity when a referral source represents a large proportion of fees, particularly in the SMSF sector. We are still working on the analysis of the submissions, but we have noted sort of 2 big areas where the stakeholders have focused on. So the respondents have requested that the AASB and APSB work together to ensure consistency in the audit and other fees categories. And anyway, we are closely liaising with the AASB on this matter. And there's mixed support for the proposed fee dependency for the SMS sector of 20%. and some have suggested that this should be increased to 30%. So that's where we are at with, and we will be taking some of the feedback to the board's November 2021 meeting, Brendan.
Okay, that's good to hear there, Shanna. We're now going to change tack away from auditing and more to sustainability and environmental issues, and I'm going to ask Craig to answer this next question. So, sustainability and climate change are key environmental issues that governments and organisations around the world are trying to address. These issues are reported as part of environmental, social and corporate governance reporting, or ESG for short. As accountants, what are the key matters and ethical obligations we should be mindful of in relation to this environmental, social and corporate governance reporting?
Thanks, Brendan. And clearly a very topical matter at the moment, and the question well timed with the dialogue that's going on at all levels of business and investors and other stakeholders, government, etc. So ESG for short, or environmental, social and corporate governance reporting, is such a key focus area now for business, and what we do as a society over the next decade will be a key part of the way we deal with global challenges. Obviously, the linkage for professional accountants principally comes back to as preparers, advisors or assurance providers are dealing with all kinds of stakeholders and thinking about reporting mechanisms and communication. So accountants at the end of the day need to come to grips with the complexity of reporting for sustainability and climate change, and I think that's where principally it hits home and becomes the matter for us to all consider. Many countries obviously have climate targets, but there is no common reporting framework, and therefore it's not unusual to find people getting stuck at a point of saying, well, yeah, where do I start? How do I progress this? And where do I compare those against targets? So there is obviously a first step in what can be done for internationally accepted, consistent sustainability reporting framework. Globally, there are 6 frameworks that have been developed since 1997. The Global Reporting Initiative, Sustainability Accounting Standards Board, International Integrated Reporting Council, Task Force on Climate Related Disclosures, Carbon Disclosure Project, and then the Climate Disclosure Standards Board. All rather full mouthfuls, and as you can imagine, the continual evolution. Somewhat, these different frameworks have different target outcomes, objectives and audiences, which invariably create some communication or information gaps. Those gaps, together with the observed reporting practices of issuers, be that cherry picking what data, reporting selectively against different frameworks, ultimately provide a strong rationale for actually trying to come to a global reporting standard that builds on what's been developed over the last nearly 25 years. There is high-level guidance. It does cover sustainability, but the linkage to the financial statements or the integration with financial reporting standards is somewhat lacking. There is increasingly a call for that closer coordination, and indeed 5 of those bodies have basically launched a prototype climate-related financial disclosure standard, and in June 2021 the Sustainability Accounting Standards Board and the International Integrated Reporting Council merged to create the Value Reporting Foundation. Likewise, globally, at a professional body or professional organisation level, we've seen IFAC spend a lot of time and investment in this area as well. So what are the relevance? Aligning and integrating climate-related information and disclosures with company climate change commitments, targets and strategic decisions. How do you measure it? How do you report it? And how do you actually make it part of your business decision making? Quantifying where appropriate the financial impacts of any climate issues. Climate-related reporting that complies with reporting requirements without material omission or misstatements. How do you approach that reporting? How do you assure on that reporting? And what's relevant to the company from a materiality viewpoint, and what's the information that investors or other stakeholders are looking for, and what can we do as accountants, professional bodies, boards, etc., to contribute to transparency and evolution. So yeah, there's a lot to take in there, Brendan, but it is very, as I remarked at the start, increasingly topical and front of mind.
Thanks, Craig. I certainly agree. It's very topical, and I know that there's a heavy focus on it within accounting education at the moment, but also within companies, and how they best, in their sustainability reports, portray an accurate picture of how they're going. I've got another question for you now, Craig, but this is on a different area, and this is probably a particular relevance to our members who are in the financial planning area. What is the current status of the Apes 230 Financial Planning Services project?
Yeah, thank you, Brendan. Obviously, you know, it's we go back into the 2012s and 2013s here, so some are 8 years on. There have been ongoing legislative and regulatory changes in the financial planning industry throughout that time. Apes board has continued to monitor and engage and assess what those evolutions are. For instance, you know, FASIA, or the Financial Advisor Standards and Ethics Authority, was established in 2017 and established a legislative code effective from January 2020, but primarily applicable to retail clients. Apes 230 has a broader coverage than the FASIA code, covering wholesale and retail, and some other areas that aren't necessarily covered through an AFSL. So what we've continued to look at for the standard is what has been happening within service provision, within investor or government stakeholder expectations, what's been evolving regarding the capacity of the sector and communication, and what's been happening around remuneration models and insurance arrangements, to clearly try and reduce the risk for accountants and the public who obtain the financial planning advice. So I think it's pretty generally noted that there is an imbalance of financial knowledge between the consumer and a member of a financial who might provide the financial planning advice. So incorporating the best interest duties and additional remuneration requirements back in 2013 and since has been a key part. No news to anyone that obviously the Financial Services Royal Commission, or the Hayne Commission, sparked a renewed focus on this area, and particularly on those who exhibited poor ethical behaviour. The Commission highlighted something like 6 ethical principles and 76 recommendations to deal with that poor behaviour or the overall environment. Federal governments continue to recommend and move to implement some of the things that can address those things. But obviously, likewise, we've seen that FASIA will cease as an entity by the end of this year, and the code and the education program will sit with government. The minister will have the power to change things, and a single disciplinary bodies to be established, the Financial Services Credit Panel. So, most would be aware, or I'm sure all would, that the Australian Law Reform Commission is also undertaking a review of financial services law, hopefully for some adaptability, efficiency, and an ability to navigate the environment. But noting that those reports will come out, late this 21 year, around this time next year, and then I think it's later in 23 before we'll see the legislative recommendations. So what does Apes Board continue to do? It continues to monitor the environment. It's a standard report that comes through, and a ongoing conversation, and that included at our March and September meetings this year, a particular lens around consumer interest and the focus over that respect. So from our view, we've seen Apes 230 continue to be the right pathway for professional accountants. Moreover, particularly, I think if you consider with the issue of the FASIA standards and the issues uncovered as part of the Financial Services Commission, remuneration-driven conflicts and fees for no service. Apes 230 has actually stood the test of time from that perspective, and maybe even ahead of the curve in some people's judgment. Principally, the best interest provisions of Apes 230 that were introduced in 2013, not just applying to financial services, but indeed to credit facilities. Again, it's noted that was recommended within Hayne. So I think as a profession overall, we should be proud of where having these professional and ethical standards to maintain some professional accounting, strong brand and reputation with their public interest focus. And I think the two key things there that we're resting through, Brendan, are obviously best interest and the remuneration framework. So ongoing monitoring, watching, and making sure that we're communicating, engaging with stakeholders and other interested parties.
Okay, thanks, Craig. And it's certainly going to be interesting to see how things evolve. And as you mentioned, we've got the education side moving back towards government control. So I'm sure that's going to have quite an impact over time as well. We'll now move to quality control issues for firms, and I'm going to come back to Shanna to address this question. So the APESB has released new standards on quality management systems for audit firms. What is the impact of this on Apes 320 quality control for firms?
As you would be aware, Brendan, the quality control requirements for Australian firms predate the creation of APESB and have been in place since the 1980s. In the last 15 years, these quality control requirements have been based on IAASB's ISQC1 standard. Due to global regulatory concerns on audit quality, IAASB ran a major project and has revamped the quality control standards and reissued them as International Quality Management Standards 1 and 2. And as you pointed out in your question, AUSP has adopted these quality management standards and released them with an effective date of 15th December 2022. These do impact on Apes 320. APESB has investigated options as to how to ensure the existing quality control measures applicable to non-assurance areas of the firm continue to be maintained. The board determined to redraft the extant Apes 320 into Apes 320 quality management for firms providing non-assurance services based on the extant Apes 320, but focused on non-assurance services. In addition, we have also drafted it in a manner to have alignment with ASQM1 at the component level for the benefit of hybrid firms. The board considered that this is the appropriate path to pursue as one, it minimizes disruption, including for SMPs, and maintaining much of the existing policies and procedures, given that there's no evidence that the existing quality control systems are not working for NAS. And two, it provides high-level alignment for hybrid firms that provide assurance and non-assurance services. The board recently released an exposure draft on these proposals and are keen to get feedback from firms, members in public practice, and other stakeholders. Comments on the exposure draft are due by the 26th of November 2021. And the board is also planning to hold a webinar in late October or early November to discuss these proposals and seek feedback from public practitioners and in particular SMP firms.
Okay, thanks for that, Channa, and I'll stay with you to look now more at the application of the standards. So my next question is kind of designed around trying to, shall we say, make the standards more easily applied by our members. So we understand that acknowledging and framing ethical conflicts between different stakeholders is an everyday challenge for us accountants. What resources has the Apes board put forward to provide guidance on the application of its standards, such as case studies or similar material to help in the application?
Thanks, Brendan, for the question. So over the last few years, APESB has focused on developing guidance material for accountants. For auditors, APESB, in collaboration with CPA Australia and the other professional bodies, developed the Independence Guide in May 2020. The guide contains 49 case studies on the key independence requirements in the restructured code. As far as I am aware, globally, this was the first publication of its kind based on the restructured code. Then to address challenges of the COVID environment in October 2020, APESB issued a publication on how to apply its pronouncements on taxation, valuation, forensic accounting, and insolvency in the COVID-19 environment. The scenarios in this publication covered members in public practice as well as business and looked at issues that may arise relating to government assistance, schemes, pressure to report on false and misleading information, or creating inflated valuations. Another key publication released in February this year was the APESB technical staff publication on whistleblowing and confidentiality. This also had 8 case studies covering scenarios for both members in public practice and business, and looked at a range of situations such as underpayment of wages, false information in tax returns, and misappropriation of funds. And since May last year, APESB also participated in Iesba's National Standards Set as COVID Working Group, which developed guidance material, and they are available on a dedicated COVID resources page on the ISBA website. The guidance documents developed by this task force will assist accountants in dealing with fraud, ethical and auditing implications of government support schemes, taxation and valuation services, and the use of specialists in the current pandemic environment. So there's been a range of materials that we have developed over the last few years, Brendan.
Hey, that's really good to know and very helpful to our members there, Channa. I'm now going to move on back to Craig, look at the international perspective of ethics. So my next question is, what projects are the IESBA working on from an international perspective, and how will these projects impact us in the Australian professional and ethical standards?
Thanks, Brendan. I'll cover 4 areas that are relevant. Firstly, the PI definition, with proposals by Iesba that will bring the international definition actually closer to the position of what's set out in Apes 110. APESB implemented the definition for pi in 2010. So, as we understand it, Iesba's expected to issue the final standard in early 2022, and then we'll look to around the middle of 22 issue a local exposure draft. So, given that the international code is moving closer, as we understand it, to the Australian position, we probably put it in the category of not significant change as far as those in practice. Post-implementation review of long association provisions. Obviously, long associations and the whole context has been a topic and an evolution for some years now, and this project's focusing on what's the jurisdictional transitional reliefs, and where a country had pre-existing controls. In Australia, the transitional relief has applied to the audits of PIEs, and the relief is meant to end in 2023, and the Iesba is currently assessing whether that sunset date is still actually appropriate. APESB recently made a submission to Iesba on this topic, suggesting that the relief be extended to address the auditor shortage issue that has no doubt been exacerbated by the COVID-19 pandemic. So there's a link around pi definitions and long associations. One of your earlier questions, Brendan, focused on the matter of technology and what were the impacts. And I did make mention of what was being done both domestically, and the fact that Iesba was having its mind and stretched and developed in this area as well. So from a technology viewpoint, there are two streams of attention for Iesba as we sit now. One's focusing on developing revisions to the code to address the issues related to technology, and indeed that links to work that we've been doing on saying, well, what are the implications of technology and the fit for purpose or relevance of a standard, or the need to adjust. So I think it's fair to say that that project will see some revisions around professional competence, due care and skill, and providing guidance to professional accountants as to how there is a reliance on the use of experts or technology in exercising their roles. And there'll be more information on IT system services, and what types of these services would not be allowed under NACE provisions, as Channa has mentioned before. The second stream is more a non-authoritative area, but making sure that there's a range of topics that do relate to technology, and indeed Apes has been working closely with the Iesba Technology Working Group to develop a guidance piece on auditor independence and technology. What are some examples of where that fits in? The approach on implementing an entire software suite, what happens with internally developed software by a firm, or indeed software developed by the firm for resale or application in a client's. What's routine or mechanical versus what's insights that can be used from the leverage of technology, and how does that apply into audit engagement. So we would expect late part of this year, calendar year that is, or early into 2022, members will see some of that guidance be released, and I'm sure it's an area that we will engage, or professional bodies will engage. And then last area is around tax planning. I think it's fair to say, obviously, traditionally a lot has been around financial statements or audit, etc. But tax is relevant within the whole ethical framework as well. So Iesba is considering a project plan to develop a principles-based framework to provide professional accountants with a guidance around conduct when providing tax planning and related services to clients and organisations, because it is important that there is a robustness through to the code, and I think it's fair to say that the public and consumers trust in the global accounting profession, in taxpayers, in government, for that whole environment. So we understand the provisions are to be framed that'll be scalable across both individual and corporate taxpayers, and from SMEs to large publicly traded multinational businesses as well. But I would suspect that on the basis that the project, for it to go ahead, I don't think we'll be seeing anything from a draft perspective until late 2022. So in summary, high definition technology, long association and tax planning. So I'm sure the attendees can understand that there's quite a correlation and a close working relationship there between Apes and Iesba.
Okay, thanks, Craig. And I just recommend to members that if you go to the Iesba website, just Google Iesba and you'll get there. And under the current projects they're working on section on that, you'll find a lot of great material about what they're doing and reports they've done around these areas. And I'd certainly recommend for you to do that. Okay, we're up to I think the last question, which I'm going to ask Chenna. It's a broader question, as you can see. What are the other standard setting projects on the Apes board's agenda that members should be aware of?
So there are three things I have, Brendan. The first one is currently the board is looking at Iesba code amendments on engagement quality review objectivity. The key change here is that the engagement partners need to cool off for 2 years before taking on the role of EQR for the same audit client. The board is still considering whether there are unintended consequences for the audit independence declaration of having this requirement in the code. So the issue will be reconsidered at the November 2021 board meeting. Secondly, recently APESB issued an exposure draft on Apes 330 insolvency services to reflect the government's insolvency reforms to support small businesses, which commenced on 1st January 2021. The insolvency reforms enables a small business, and these are companies with less than 1 million in liabilities and who meet specific eligibility criteria, such as being up to date on the lodgement of ATO obligations, and who are likely to become insolvent, to agree with creditors to restructure their business. The comment period for this exposure draft closes on the 27th of October 2021. And the third one is, as you would gather, there's a lot of changes going on, which impacts on Apes 110. So we have a plan to issue a compiled version of the code later in 2022. It will include the final versions of the current projects on NAS, fees, and EQR objectivity, as well as the already issued amending standards on the role and mindset and part 4B of the code. So I recommend that if members need further information, to visit our website or our LinkedIn page, or consider subscribing for our updates, Brendan.
That's really great. And thanks for that, Chenna and Craig. So we're getting towards the end, but we've got a link here for some further information. So if you are interested in following up on any of these issues further, please go to the Apes Board's website or the LinkedIn page for the Apes Board, or even the mobile app for the Apes Board that you can now download. I also should mention that in the chat box, if you click to the chat box, you'll find there's links to important material for each of the questions that have been addressed today by our two esteemed members of the Apes board. And so if you've got particular interest there, you can go click on to those links. Now, we do have a short bit of time, probably about 8 minutes left, for any questions that people might wish to type into the chat box. So we're happy to see if we can answer those as best we can. I might just start us off on that by asking the question to either of you, which is, in the last few weeks, I guess a lot of us have been shocked by the revelations around KPMG and the allegations that there was an element of collusion amongst some staff there in responding to material that they were assessed on for professional development, mandatory professional development. Any thoughts from you as members of the Apes board on this scandal?
Craig, shall I leave that one for you?
I thought it was going to be the other way around.
I know it's a tough question to answer diplomatically.
Yeah, no, I think obviously that's an area that has got a lot of attention recent, having hit the press, and I think to comment at this point probably not a position that we should take, Brendan, to be fair.
Yeah, it's certainly going to be interesting. I know the CPA Australia has written to its members about this through our CEO, and the Apes, I think CPA Australia's message, if I can recall correctly, essentially is that they have asked the PCAOB, which is the auditor of the auditors in the US, to ask whether there are any members members of CPA Australia who might be involved in this. So we don't really know where that's going, but it's going to be interesting to see, because it could end up in the disciplinary committee of the professional accounting bodies here, if particular members are involved. But obviously that's speculation. We really don't know the full circumstances, but we certainly saw all the publicity on it. Now, we got any questions here in the chat that I'm not seeing them there, so I'm not sure if there's any questions that have been asked by people here.
No questions have come through so far there, Brendan. So if anyone has any questions, comments, please go ahead and pop it into the chat box now.
I can see a hand up. Is that Maren?
Hey, is that Maren? Did you have a question?
I was just going to comment on the CPA update to members, Chana.
Sure,
I think you'll
Maren.
find that we've addressed our question to KPMG in Australia, not the PCAOB.
Oh, okay. Apologies there.
But it's look, it's obviously a complex matter, and there's a whole lot of privacy issues. So it's a yeah. Look, as our colleagues have said, this is complex. So I'll leave it there. Thank you.
Thanks, Maren.
Any other questions or queries people might have? Okay, looks like we're all a bit quiet there today. Are there any final or closing remarks that either of you would like to make around any of the areas you've covered today, Chana or Craig?
So I think there's a lot of changes happening. As we talked about, particularly in the audit regulation space, Brendan, with the PJC, the NAS and fees changes coming through the code, as well as the quality management standards. So while it may seem like some of it is more focused on members in public practice, members in business such as CFOs also need to be aware of it because that will impact on their interaction with auditors. So I think there is a lot of change happening and members should be aware of it as we move forward. Thanks, Brendan.
Okay, fine. Okay, well, we might finish up there a couple of minutes early. It's good to be ahead of time rather than behind. So I'd just like to finish by thanking our two presenters who've done a great job of answering those questions that we put to them, and they've, as said, gone into a lot of detail and also left links for each question for our audience. I'd also like to thank all of our participants for tuning in, and I hope that you did find it useful today, and we look forward to you having participating in future webinars, not just in ethics, but in other parts of the organisation. So thanks, everybody, and have a good rest of your day. Thank you.
Thanks, Brendan. Thanks, everyone.
Thanks, Brendan. Thanks, everyone.
Cheers.
Wonderful. I might just jump in there and just second that and say a big thank you to Brendan, Shanna and Craig for a fantastic webinar. A special thanks everyone as well for your participation as well as for your attendance. That does formally conclude today's webinar, everyone. To exit, go ahead and click on the cross on the bottom panel. Upon exiting, just letting you know that you are automatically redirected to a feedback form. You are initially taken to an external site message. Go ahead and click the blue continue button just to go through. It only takes about 30 seconds to complete. However, it's really beneficial for CPA Australia as well as our panel. Now, I also had a few private questions there in the chat box, just letting you all know everybody will receive a copy of today's webinar recording alongside the presentation as well, and it'll be sent to you via email within the next 24 hours. Thanks once again, everyone. What I might do now is I'll pop on the music as you all exit. Have a great day and stay safe. Thank you.